Nike is putting up impressive results, including record high sales. Another positive development is that Nike possesses a powerful tool for future sustained growth, known as Nike Direct. Nike was founded in 1964 and headquartered in Beaverton, Oregon. It designs and develops athletic footwear, apparel, equipment, and accessories. Nike's brand portfolio, including Nike, Jordan, and Converse, experienced substantial growth in fiscal 2023. With over $50 billion in revenue, $4.5 billion in 2022 annual free cash flow, and over $11 billion in excess cash, Nike is the leader in its industry. The company has reported positive net income for each year over the past decade, further reinforcing its high profitability. In an era marked by high interest rates and persistent economic uncertainty, even industry giants like Nike are facing headwinds. As of shooting the video, Nike has a market cap of almost $150 billion and a share price of $97.67. That's 55% lower than its record high of $173.68 in November 2021. Problems created by the pandemic are still lingering, particularly in China. Economic weakness everywhere else isn't exactly helping, and inflation is making things even worse. The year-to-date share price has experienced a decline of 17.75%, while the S&P 500 have risen by 16.56%. It marks a significant difference of over 34% between the two. That performance gap can be explained by a tough selling environment in the footwear industry right now. But this challenge could lay the foundation for better returns for investors buying Nike shares today. This is somewhat unexpected, especially considering Nike's status as industry leader, which typically suggests growth during overall market upswings. Nike's revenue is up to $51.2 billion, which is 9.6% higher than last year. And earnings per share grew 27% per year over the last 3 years, from $1.60 a share to $3.23 a share for the full year. And with Nike Direct, the results will become even better. Nike Direct is a way for Nike to better engage with customers by tailoring marketing toward their preferences, from promotions to sales and new product lines. Nike Direct is the perfect way for Nike to get more from its top customers. By employing this direct-to-customer strategy, which bypasses traditional retailers and enables customers to buy products directly from Nike's website, app, and other channels, the company enjoys significantly larger profit margins. The digital share of Nike's business grew to 26%, up from 10% in fiscal 2019. In the last 5 years, Nike Direct grew from a 30.1% share of total revenue to 41.6%. So, while the majority of Nike's business is still wholesale, it would be a mistake to overlook the role that Nike Direct is playing. According to analysts, the company currently holds a moderate buy rating, with a price target of $130.28 per share. This projection indicates a significant upside potential of approximately 33.4%. Examining the ownership structure of the company, we see that institutions possess a significant 63.42%, while insiders hold a relatively minor 0.5% ownership. The limited insider ownership can be attributed to their recent sale of shares, amounting to over $17 million in the past 3 months. Nike is expected to grow its earnings by 18.6% in the coming year, from $3.71 a share to $4.40 a share. The company has a PE ratio of 30.24, which is significantly higher than the industry average of 19.4. Share buybacks serve as an effective way to reward investors. Illustrated in this chart is Nike's continuous share repurchase activity over the past 14 years. Starting with 1.97 billion shares in late 2009, the company has reduced its outstanding shares to just 1.57 billion nowadays. This reduction in the total number of outstanding shares boosts earnings per share and shows management's confidence in the company. Simultaneously, shareholders discover themselves possessing a larger portion of the company. Now let's talk about the dividend. Following the recent decrease in value, the dividend yield has surpassed the 5-year average of 0.96%. It has risen from 0.69% at the beginning of the year to its current level of 1.39%. This yield represents $1.36 a share in annual dividends. Nike has a payout ratio of around 40%, which is generally considered safe. Companies with growing earnings and low payout ratios are often the best long-term dividend stocks. Such companies have the potential to grow their earnings and raise the portion they distribute as dividends, effectively boosting the dividend yield. The company has consistently increased its dividends for the past 21 years, highlighting its commitment to rewarding shareholders with a growing stream of income. Nike's dedication to maintaining its dividend growth track record is evident in its substantial dividend increases. Over the past decade, the company has consistently raised its dividend by at least 10% every year, and an average of 12% a year. In 2014, Nike distributed dividends of 12 cents per share quarterly, where today the dividend has increased to 34 cents per share. Indeed, Nike's dividend increases significantly outpace inflation and the expectations of many dividend growth investors. While most dividend investors seek companies that can sustain and deliver modest dividend increases in the range of 5 to 6%, Nike's consistent track record of delivering increases at least twice that rate is worth a look, and may be particularly appealing to income-focused investors looking for substantial and accelerated income growth. And here is my opinion about the company. Even if Nike has a weak few quarters, the stock sell-off creates a compelling buying opportunity for patient investors. As a dividend investor, I appreciate Nike's rapid dividend growth. While the current dividend yield falls slightly below my preferred range, the company's impressive dividend history and its dominant position in the industry gives me confidence in its future growth prospects. I'm aware that Nike's recent performance hasn't been strong, reflected in its negative 5.6% average total annual return including dividends over the past 3 years. However, I believe this is a temporary setback, and I anticipate that Nike will experience accelerated growth in the future. I am 20.3% down on the stock without dividend included. I currently hold some shares in the company and intend to acquire more, particularly when the share price is below $100 a share. Following that, I will proceed with additional purchases more cautiously. Once the share price reaches $110 per share, I intend to reevaluate the company. If it appears overvalued to me, my strategy will shift to only reinvesting dividends for some period of time. I really like the company, but I'm open to explore better opportunities in the market. Nike is currently one of my preferred options, and this is partly driven by my ongoing goal to expand my holdings in the company. I see the current price as a compelling opportunity to achieve this objective. I periodically look at my portfolio to identify potential improvements and ensure that no single position becomes disproportionately large within my investment portfolio. You must do this from time to time too. Don't forget to like the video and subscribe to the channel for more dividend related content. Continue investing no matter what is happening and never betray your strategy. This is all for today. See you soon. Bye bye.